What up, Hyperchange? Welcome to another episode. Today, we're gonna talk about Facebook and why the stock has been soaring and the company has been able to reach a valuation of $500 billion plus. Is this fair? Is the market crazy? What are their earnings looking like? We're gonna go through it all. First, to give you guys a little bit of history, Facebook IPO'd in 2012 and opened trading around $40 per share. This represented a valuation of $100 billion and left a ton of skeptics in the mainstream media questioning whether the company would ever be able to live up to these gargantuan expectations. As a consequence, difficulty transitioning to mobile, the stock fell from $40 to $20 per share just a couple months after its IPO. But ever since then, the stock has been on a consistent uptrend. Today is trading at about $180 per share. That's about a 9 times increase from the low of $20 just 5 years ago. So I wanted to show you guys the financials and see why Facebook has been killing it. They are making so much money. Facebook has been profitable since day one. The only year where their operating earnings did not grow was 2012 because that was the year the company IPO'd and had some one-time IPO expenses. But every single year since then, you can see that Facebook has just been a cash flow machine and has been pumping out billions of dollars in profit, and it is growing like crazy. This is a business that was doing under $10 billion in revenue in 2013. 2017 just reported $41 billion in revenue with profits of $20 billion. And what is perhaps most impressive about Facebook is just how profitable they are. If you look at their operating margin since 2010, you'll notice with the one exception of 2012, the year they IPO'd, Facebook's operating margins have been outstanding. And this means in 2017, 50% operating margins, that 50 cents of every dollar in revenue was a profit for the company. This is one of the highest operating margins of any company in the entire stock market. It's higher than Apple, it's higher than Microsoft, it's higher than, I don't know, Adobe, Google. Think of a company, Facebook is probably more profitable than them, and that is one of the huge reasons that has been driving up the stock share price. Beyond just being so profitable, Facebook has exhibited an incredible ability to grow its revenue consistently and find new avenues and new ways to monetize its platform. The company's growth rate of revenue in 2017 was 47%. I mean, the chart kind of speaks for itself. They've been hovering around 40 to 50% plus revenue growth since their IPO, and being so profitable and generating so much excess cash, Facebook has seen its balance sheet just pile up with billions and billions of dollars. Its net cash position, cash and short-term investments on the balance sheet have gone from about $10 billion in 2012, the year they IPO'd, to over $40 billion in 2017. And this is despite the fact they've been making acquisitions like Instagram, WhatsApp, Oculus. Even so, the company is racking up billions of dollars of cash on its balance sheet. So now let's take a look at what I'm expecting for 2018. Revenue of about $56 billion in 2018 and be able to produce $26 billion in operating profit. Just my gut feeling, but I think these are actually pretty conservative numbers, but these are what we're gonna use to do a valuation of Facebook. Here's our valuation of Facebook. With about 3 billion shares outstanding and a price of 180 per share, Facebook is trading at a market capitalization of $540 billion. That's right, more than half a trillion. Based on that 540 billion number, divided by my projection of 56 billion in 2018 revenue, we're looking at a price sales ratio of 9.6x, which seems very high and would be high for almost any industry or any business, but Facebook is so profitable that it actually is not that expensive. If we divide the $540 billion market cap by the 26 billion in expected earnings I think they can do in 2018, we're only looking at a P/EBIT ratio of 20.8x. This is not expensive at all. And once again, I think my projections for earnings and revenue may actually be conservative. And even so, it looks like Facebook is only trading about 20 or 21 times this year's operating income. The S&P 500 is trading at about 18 or 20 times forward operating income as well. So Facebook's actual PE ratio is in line with the market despite them having displayed such an incredible track record for growth. I think this actually means Facebook, if you think they can continue growing from here, grow EBIT to 30 billion and beyond in 2019, is actually looking like a very cheap stock. They're pumping out so much money. I think Facebook, has a clear path to $1 trillion market cap if they can continue this earnings trajectory. One more thing to throw in there too is this valuation isn't taking into account the massive net cash position they have, which I'm expecting by the end of 2018 will be about $60 billion, which would represent about 10 to 12% of the company's overall market cap. So if you remove the net cash on their balance sheet from the company's market cap, their P/EBIT ratio gets even cheaper and is only about 18x. 4x. So despite Facebook having run up to $180 per share, the stock price seeming to be at astronomical highs, on a price earnings ratio, the company is actually very, very fairly priced. One thing that I think is important to address though is this sort of political drama surrounding Facebook with the election, with the advertisements took out by Russians on their platform. They're still working through that. That could possibly be a headwind on the valuation, and that's just a sign of a deeper problem that Facebook and every social network in general is gonna have to start dealing with going forward. Also, Instagram, in my opinion, is actually worth more than Facebook. Facebook doesn't disclose where it's actually getting its revenue from, and although it's probably still getting a lot more revenue from Facebook than Instagram, Instagram's growth rate of revenue is probably astronomically higher than Facebook and is set to overtake Facebook in the pretty near term. We're still in the very early innings of watching this grow. A sort of moonshot idea I have for Instagram is that Facebook could actually allow creators to monetize their content, pictures or videos, or even stories on Instagram and share revenue. I think this would be a huge way to drive engagement and growth on the platform long term, sort of evolve into what Snap is gonna try and do and help creators monetize, basically be a YouTube of mobile, could be coming in a couple years and take Instagram really to the next level. Also, there's rumors that Facebook wants to launch a $500 smart speaker this year that would have a big touchscreen, basically allowing you to video chat with your friends and family and sort of be like an Alexa, Apple HomePod competitor. I don't really get what they're trying to do with that and why Facebook would be the one to win at that battle, but it seems like they want to make a move in this smart speaker AI market. That could be another growth avenue for the company long term. Also, Facebook owns Oculus, which is the leader in virtual reality. I still think we're a couple years away from seeing virtual reality go mainstream, but this is undoubtedly where the future of digital media and social networking is headed. That's why Facebook bought Oculus. They're thinking really long term here. Yeah, so I mean, the bottom line is we'll see if Facebook can keep this up. Zuckerberg is still incredibly young. He's an incredibly sharp CEO. He's created immense wealth for shareholders, you know, even the venture capitalists, even the people who invested right at the IPO. He has turned Facebook from a popular website into a multi-billion-dollar cash flow machine. Let me know what you think in the comments below. Is Facebook's valuation fair? Are the earnings in for a slowdown? Why does it look so cheap despite a track record of growth? You tell me. See you guys next time. Peace.